In your book, How to Listen When Markets Speak, you make the case for why America's position as the world's premier reserve currency will weaken. At a high level, what do we need to be thinking about?
What I talked about before is around all those central banks and the coupons. That's the big thing. So they're so long government bonds. There's literally, I think, 40 trillion of dollar denominated debt at least. It's so that just those coupons alone are driving money into gold. But then there's the element of like, okay, China's very exposed to the U.S. bond market. They're buying a lot less bonds than they used to. Japan, aging population, they're buying more, but they're not going to be there to really make up for the rest of the world. So in terms of your bond sales, if you don't have enough global buyers of bonds, let me give you an example. The 2-year Treasury auction this week. We do auctions all the time, right? We do auctions every week. But to give you an example, the average 2-year Treasury auction is like $70 billion, Jay. Now, if you go back to 2019, we were like, $20 billion auctions, 20 to 25, maybe 30. So this is just the 2-year. This is just one auction out of many. So we're trying to sell like $70 billion. And there was a 5-year auction, I think, today. And so it was a 2-year auction yesterday, 5-year auction today. So these auction sizes, Jay, are like way above, like think of Lehman Brothers, how bad that crisis was. And the auction sizes today are, I think, double Lehman levels, which was like trying to pay off this huge financial crisis. And so if the global investors are not there in size, that once again forces the Fed in to support the bond market, and that gets you that big trade. But in terms of the reserve currency status, over time, because we're trying to, because we have to use inflation to monetize the debt. The only way you get out of a $35 trillion debt hole, Jay, the only way 36 trillion is to keep interest rates below the rate of inflation. So interest rates below the rate of inflation. It's called financial repression. And that's what monetizes the debt. That's how you get out of it. And when you do that, you weaken the currency over time. And so we're not going to lose the reserve currency status, but are we going to go, are we going to cut the U.S. market share way down over the next 5 years? Yeah, we're going to be, a much smaller player than we used to be.